nature's way of telling you something's wrong. It's nature's way of telling you in a song. It's nature's way of receiving you. It's nature's way of retrieving you. It's nature's way of telling you something's wrong. It's nature's way of telling you you will freeze. It's nature's way of telling you dying trees. It's nature's way of receiving you. It's nature's way of retrieving you. It's nature's way of telling you something's wrong. It's nature's way of telling you something's wrong. It's nature's way of receiving you. It's nature's way of retrieving you. It's nature's way of telling you something's wrong. It's nature's way of telling you something's wrong. Something's wrong.
Hello, and thank you to everyone who is joining us. It looks like we're about ready to get started, so I'm going to stop my screen share, and if the speakers can go ahead and turn on their cameras, and we'll kick it over to Marty to get started. Thank you.
Well, good morning, everyone, and thank you, Mary, for getting us going here. And for those of you who are able to be at the opening plenary, I hope you thoroughly enjoyed the second day and that great kickoff. And it would help if you're willing to go ahead and put your name and affiliation using the chat feature in Zoom to allow our panelists to actually get to know who's actually here with us today. So today we are having a session on effective partnerships and social capital. And I just have to say, and listening to some of the sessions earlier today and yesterday, the concept of partnerships has not surprisingly been a prevalent part of the conversations that we've been having. No one sector of society will be able to achieve the SDGs on their own. Often incentives and objectives for stakeholders do not align to achieve equity and sustainability for those most marginalized in low and middle income countries. However, there are outstanding examples of effective partnerships among NGOs, private sector, faith leaders, and local governments. We want to talk about what the ingredients are that help us form effective partnerships to advance the SDGs. What's the appropriate role of each sector to maximize our success? So we have some expert panelists with us today. I'm really excited to introduce them to you, and we will get started shortly hearing from them and then ultimately hearing questions and comments from you, the audience, as well. So with us today, we have Greta Bull, who's the CEO of the Consultant Group to Assist the Poor, or CGAP. We have Jonathan Papoulidis as the Executive Advisor of the Fragile States for World Vision. And we have Abe Diaz, who's the Senior TPM doing disaster relief coordination and efforts for Amazon. And I am Marty Kooistra. I work for the Housing Development Consortium. I also consult with a group, Sapwood Advisors, and I'm a member of the board of Global Washington for many years. So it's my privilege to be here with you today. We're going to have some opening questions for the panel and get some dialogue going there. And about the bottom of the hour, we will ask you if you wouldn't mind start using the Q&A feature at the bottom of your screen in Zoom to put your questions in, or if you use the Whova app, I'm sure Mary, with her multiple talents, will keep an eye on that for us, and we'll make sure those questions move forward and try our best to get as many of them answered by our wonderful panelists. So with all of that behind us, I believe we're ready to get rolling, and I see our panelists are eager to start. So I've got an opening comment kind of question area that I think will help tee us up. And I'm going to pass this question to you, Greta, first to get us going. The pandemic has disrupted business as usual all over the world. We continue to hear that from our sessions the last day and a half. Many of us are thinking or rethinking actually how and why systems function, or they don't, for low and moderate middle income countries. This is also putting into question who does what and if we can build more effective partnerships as we transition post-pandemic. And I really want to emphasize this need for us to continue to pay attention to the new awakening that some folks have had about how equity has really not been a part of our society. So to start with, can each of you briefly describe what you see as the value of partnerships? And Greta, we're going to start with you, and then we'll go to Abe and pass it on to Jonathan. So go ahead, Greta, and take it away.
Great. Thank you so much, Marty. And good morning to all of you. It's actually just become afternoon where I am, but it's a pleasure to be here speaking with you today. So I should probably start just by explaining for people who are listening what exactly CGAP is and what we work on. CGAP is a donor consortium of more than 30 member donors, and we're housed in the World Bank focused on financial inclusion for the poor. In our early years, we focused on development of the microfinance industry, which is now actually a global industry serving over 140 million poor households worldwide with financial services. And since 2008, we've been very, very focused on the ways that digital tools and particularly payment systems can contribute to financial inclusion of the poor. You know, I'm so happy to speak to this topic because our industry, our sector, financial inclusion, has always been all about partnerships, and CGAP's sort of always been at the middle of that. So CGAP is a global public good, and we're essentially all about partnerships. Everything we do is about building coalitions of partners in both the private and the public sectors to create enabling conditions for the emergence and development of inclusive finance. As you know, access to finance is actually not an SDG on its own, but it is embedded into a number of other SDGs. They can't happen unless there are the payments rails in particular, or access to other financial services that can make some of those SDGs come about. So let me just give you 3 examples of the ways that partnerships in the financial inclusion space have resulted in significant improvements in access to financial services for the world's poor. And there are different kinds of partnerships between different kinds of market players. So I'll start with microfinance, which is where we began. And that was really a partnership between donors, investors, and providers of services in the market. So in its earliest days, the microcredit and then later the microfinance industries were funded by donors who were experimenting with ways that poor people could improve their lives through access to credit primarily. And CGAP became involved in this and worked with the emerging microfinance community to help develop best practice and then metrics for this new industry. Why was that important? Well, for investment to come in, they needed to understand what was going on. They needed to understand how the industry worked, what the growth prospects were, what the risks were, and the performance of these increasingly formalized financial institutions. And today, because of all that early work that was put in by donor-funded efforts. The commercial microfinance sector receives about $17 billion in commercial impact funding, with another 13 billion or so on top of that that's provided by development finance institutions. So without the metrics for knowing the financial health and impact of those institutions, those investments would not have ever been possible. We're now doing similar work in the growing off-grid energy space. So, working with the industry to kind of put that information out there is crowding in investors. So that's one. The second example is really a partnership between regulators and providers. So I'm sure most of you will be familiar with the story of M-Pesa, which is an innovation made by Safaricom in 2008 that's basically changed the face of inclusive finance globally. Mobile money providers like M-Pesa basically enabled low-income people to have access to accounts for the first time because regulators allowed non-bank providers to deliver those services. And that enabled people who had really strong distribution capabilities to get those financial services out to people in an affordable way. And by aggregating services at the front end, it completely transformed the affordability of delivering those services. Those of you who work in the financial sector will know very well that regulators don't like letting go of control of the financial sector. It's really important because they're responsible for its stability and integrity. But by issuing a no objection letter and letting Safaricom experiment with a new way of delivering those services, a crucial innovation was allowed to pilot and then flourish. And that's now been picked up by 290 other mobile money deployments in 95 countries around the world. And those services reach over 1 billion registered users and 372 million active users with basic accounts. And that played a pretty crucial role in bringing 1.2 billion people into the formal financial system between 2011 and 2017. And that strengthened interaction between regulators and providers is now being realized through new mechanisms like regulatory sandboxes, innovation offices, and those allow regulators to let providers experiment and test and learn and to engage in structured dialogue with them. And that's really led to a boom in fintech and innovative solutions to different kinds of challenges. Then let me give you a third example that really does relate to the pandemic. So having all this infrastructure in place and building partnerships around that has been really important to getting emergency relief out to people in the pandemic. So in the early days, it was pretty clear that getting money into people's hands was an urgent priority. But many low-income people in emerging markets don't actually have access to bank accounts. So what we saw in sort of March, April, May was extraordinary collaboration between government social protection programs and financial services providers to get money into the hands of families who needed it quickly. So, for example, I spoke about M-Pesa. M-Pesa offered to zero-rate transactions over its systems in the early stages of the crisis to make them free, basically, both to facilitate the movement of funds around the country, but also to help the Kenyan government to deliver social payments to people's M-wallets without them losing a part of that payment to fees. The Indian government most famously mobilized its public and private infrastructure to get payments that were valued on average at $7 per payment to 200 million women in 3 waves between March and June of 2020. And that wouldn't have been possible without that kind of infrastructure that was built collaboratively in India by both the private and the public sectors. And increasingly, these payment mechanisms are being used to get relief to people like forcibly displaced persons, to people who receive social payments, et cetera. And the World Bank estimates that around 200 countries have expanded or introduced social protection programs since the crisis began, and many of these are being delivered through these kinds of collaborative infrastructures. I'll stop there.
Well, thank you for that, Greta. And Abe, let's pivot to you. What do you see as the value of partnerships in your work and in your experience?
Thank you, Marty. I happy to be here with Greta and Jonathan. I work in Amazon in the community, and within Amazon in the community, I work in disaster relief. So this part of Amazon, we focus very much in partnerships. We have a mission to basically harness Amazon's innovation and scale and put it towards a better future with our communities and working with our communities and our partners. So we're known for building a culture of just kind of creating impossible solutions, right? If you think about Amazon using drones or some of the other things that we've done in the past, very much we're aligned with that innovation, and we want to channel that innovation towards working with our partners. One of the things that kind of makes us a bit different is there's a lot of corporate donors. A lot of them can participate with, with cash, quickly provide cash, and cash is incredibly important. I think Greta has explained to great detail why that is so important, and especially in this year, in this pandemic. But in addition to that, I think our superpower as a company is being able to use our assets, which includes our employees, which have volunteered to multiple events in the past. It's using all of our infrastructure to help deliver items, to help our partners get the items that they need. So it's not just logistics, but it's also like logistics and technology. So to me specifically, I work in disaster relief. In addition to my team, there's another team inside of Amazon that part of the AWS team that works with technology solutions. So we're trying to fulfill that portfolio of needs of partners in different ways, using the people who are really good at what they do. So what I would say definitely is that partnerships for me is a force multiplier. Is being able to leverage what every partner or every part of that formula or equation is really good at, and then sort of like double down on that. So when you look at the landscape between governmental, nonprofit, and corporate, we all have different parts that we're really good at. So a great partnership is being able to leverage the right parts of that equation towards a better future for our communities. So I think I'll leave it at that.
Thank you, Abe. Jonathan, let's go to you. Same question. Value of partnerships in your work. What have you seen?
Thanks, Marty. So I think we can think of the value of partnerships as solving three collective problems. The one would be collective understanding problems of really complex challenges, as you alluded to earlier, system failure and performance, and how we can better support the poorest and development solutions. And to do that well, you need a diversity of perspectives, not only from the innovation side of what big data and analysis and machine learning can bring to understanding the problem, but also the political and social elements of a problem as well as the environmental. So you need multiple perspectives that you can't get from any particular organization or sector, and that's where partnerships come in. There's also then the collective action problem that partnerships can help solve by bringing in infrastructure, resources, assets, the things that Greta and Abe were talking about, because again, you can't solve any particular complex problem from just a single sector or organization. So it helps to do that. And then the third is the collective financing issue. We know that the SDGs are going to need trillions of dollars, and you're not going to get that from any particular one single source. And so collective financing can come from the markets, including the capital markets, comes from philanthropy. It also comes from formal overseas development assistance. And the question is, how do we better leverage and harness those collective resources together? So I think looking across the board, those are the kind of the collective values of partnerships. Now today I'm partly representing SDG 11 on sustainable cities and settlements. And I can say that looking over the last few years, we've seen some really tremendous and innovative partnerships going on. You've seen foundations and corporations working with governments to better understand really complex systems problems with satellite imagery, machine learning, very complex data sets, which has been incredible. You've seen also support going to governments at multiple levels to better regulate and to plan and to make some of the innovations possible that Greta was talking about in terms of cash assistance. You've also seen NGOs and multilaterals and others working to be a bridge between communities and governments. So you have more sustainable feedback loops in terms of what's working, how can governments become more responsive in cities. This is all extremely important, but there's a problem. And the problem is that these ecosystems of partnerships, this shared value that's being created, really isn't moving to the last mile, what we would think of as the fragile cities. And these are the ones from Bamako to Baghdad, Kathmandu to Kabul, Kinshasa to Kampala. There might be a correlation between cities starting with K and some of their fragility. But we're not seeing the same level of momentum, of leadership, of partnerships coming together to address fixed cost problems and risk problems to go to the most vulnerable. And this is really important because these fragile cities are the front lines of development and whether or not we're going to actually meet the SDGs. In the space of about 40 years, populations in these more fragile cities jumped by 326%. And we know that they're urbanizing faster than any other place in the world. So the majority of these populations are actually living in very informal and slum environments. So this is really the place where we have to pivot now to really focus forward. And we don't want to happen what happened with the MDGs, which was that in several cases, the targets were met by finding populations that were very close already to meeting those targets in terms of services and support. And they were supported over the last mile of that to be able to meet the target for the country without really touching the hardest places. And that's where we need to go now. World Vision has been around for about 70 years. And about 10 years ago, we began to start our own urban support model, which we now call the citywide approach. So for instance, in terms of the pandemic response, we've been supporting over 250 cities in about 56 countries, most of which are fragile places. And we have partnerships with government that range from the national level to the municipal, down to the very local district level. We're working with Procter & Gamble, we're working with Walmart Foundation, several corporate entities, as well as very local businesses and restaurants to provide food solutions, health strengthening solutions, better collaborative environments. And we see in this space, the World Bank doing some really great work on their city resilience program. We see UN Habitat focusing more on these fragile cities. And we see new entities like the US Development Finance Corporation, DFC, now having a portfolio that is largely comprised of low income and fragile places. And so this is the great start, but in this last decade of action, we really have to accelerate the pace in which we go to these really hard places. So I think this is the challenge of partnerships moving forward.
Wonderful. Thank you for that tee up. And I want to bring it back to you, Abe, and ask you to talk a little bit about when you think about response to a disaster, and effective coordination and partnership is utmost importance. What's the most effective role that a company like Amazon can play in working with NGOs? What have you learned, and what are some of the challenges, and how are you working to overcome those?
I think for us it's critical. In Amazon, we had the concept of the leadership principles. And one of those is to work backwards from the customer. And the most important thing we do there is really listening into our partners, our communities, and understanding what the problem is. It's not offering help. It's not offering. It's not saying, here's what I have. Like, do you want this? Yes or no. It's really listening. What are the needs, and then trying to meet those needs as best as we can. Right. Specifically for disaster relief, you think about warehouse space, right? A lot of donors might say, hey, well, I have this bunch of stuff that is, it's needed. Do you guys want it? Yes or no? And that pressure on our partners sometimes gets to the point where they say yes, because they feel that donation might not be there in the future, or that partner might not participate in the future. And that can take up hundreds of warehouse space that really should be prioritized for the most critical needs. So us specifically, we try to say, like, what is it that you need, and understand like not just why they think they need that, but like what are the reasons that they need that, right? So if you think about water, wash, right, sanitation, potable water, especially in disaster areas, after some of the water sources get contaminated, right? There's different approaches we can use to help with that. You can deploy water bottles. It's a great example of that. It's immediate, it's available in most countries, but in other places, that's really not the best tool. Deploying a water filter would not only help you in that immediate moment, but that filter can give you, 6-8 months of potable water that have much bigger impact than just one single bottle. So it's understanding, well, what is the need? It's water's the need, potable water's the need. What's the audience? What's the population? So I think, like I said, as Amazon, we really like to work backwards from the customer, listening what they're saying, and apply some more agile processes and iterate, learn, and try again. So that's one of the best things. I think that cadence of innovation and deploying new iterations of solutions is pretty fast, especially with some of the corporate donors that I've seen. So second is, after we listen in, is really putting all of our assets at the disposal of our partners. So this year has been an extraordinary year, and I can definitely say that we like everybody has been stressed in multiple ways. So for us, when COVID hit, it was not really just donating products, but it's activating our network of deliveries. Right. So we have delivery service partners that are the guys who would probably see delivering packages to your home a few times a week. So what we've done is to say, well, what is the biggest need right now? And who are the partners that we can work with? There are certain things that we don't have we're not the best at. Right? So for example, food banks are really world class in distributing, food to the people that really need it the most. So what we did is say, well, let's support them with what they need right now. What they needed right now was access to transportation. So we've enabled in 25 cities in the US, in other countries worldwide, a network of delivery drivers that are going, stopping at the food bank and then taking, those packages to people's homes. These are people who are immune compromised, elderly, who couldn't any other way get access to the food. So really, like I said, it's listening in first, and then applying all the assets that you have, not just products, but all the logistical, all the things that you have. As we also have done in the past for disaster relief, where our customers are an asset of us, if you think about it, right? So we have the capability of funneling traffic from our homepage to disaster relief campaigns, and we can highlight partners that we work with. And I see Josh in the chat panel from Save the Children. One of our partners in the past, where we said like, hey, there's certain organizations who are participating in the wildfires, the hurricanes. Here are them. You can help with either cash, or you can help with product donations, because different people have different ways that they like to participate in, and we want to listen to our customers too and understand, well, here's solutions that can help you participate in whichever way you want. So I think that is that's the most critical for us, really being able to listen in, to iterate quickly and move to what we think will be the next iteration of it. Lastly, I'll say, Marty, is one great example for us this year when COVID happened was we adopted about 300 organizations around the globe, right? And basically set up a program, what we call ambassador shopping, where Amazon employees were literally working with these partners hand in hand, saying, what do you need? What is different now in COVID? What do you need? What products? How can we help you? And literally delivering this directly to their homes or their addresses. And one of the benefits that we had was there's this giant amount of data, right? So as we're going through doing those donations, we're seeing the data, we're looking at the anecdotes and understanding, hey, there's something very different here. They're not asking for the typical products that they do, right? They're asking for something else. They're asking for printers and monitors and stuff to be able to work from home, because the organizations also want to keep their volunteers and healthy. So we pivoted and we said, okay, well, we're going to work with you on getting those products to your home so you can continue doing the work that you're doing with the community. So that, I think, is like I said, is being able to iterate quickly and deploy new solutions to what is happening.
Well, thank you for that, Abe. And if we get time, I want to come back to you and talk a little bit about sort of your role in helping lead that sort of cultural dynamic. I mean, a lot of us, I think, have a perception, right, of Amazon this behemoth, and how do you get the culture of your entire workforce connected to what you're really trying to accomplish? I think it's an amazing conversation. But Jonathan, I want to go to you, and maybe you can pick up on this a little bit, as well as talk about, you know, your what you think is needed to break the cycle of poverty in local communities. But in listening to Abe talk and your discussion of the last mile, I mean, there's intent there, right? And so how do you perceive some of that in your work? And then also talk a little bit about, you know, where you see things going in terms of social capital and all of that.
Sure. So I think what's been really exciting about the conversation so far, both from what Abe is saying and Greta, is that we're slowly seeing in the development sector a move from a more sort of supply-driven culture, so mass commodities, mass service provision, to a more demand-driven type of culture, where we're adapting our ways of working so that, for example, as Abe is saying, they're able to see what exactly the customer, and in cases of crisis, the beneficiary needs, and match exactly what that looks like. So in some cases, it's going to be water and health provisions. In other cases, it's going to be things that allow them to continue to communicate or run their business. And so that's been really incredible. We've seen, as Greta was saying, in the microfinance space, that loans are not just being taken out to start small businesses. They're often taken out to smooth consumption and to do home improvements to make their places more resilient. And so we're getting into this really interesting space now around more adaptive, iterative, and demand-driven types of ways of doing development. And I think that's really where we need to go if we're going to try to accelerate progress in the SDGs. Now, underlying that, and to your point about social capital, I think is a very important point. The World Development Report in 2017 on governance makes a really fascinating and important insight. It says, despite common misperceptions, yesterday's fragile states, which are today's most advanced economies and peaceful societies, did not get there by rapid spurts of growth. You know, this kind of very fetishistic kind of approach to growth, which we see a lot of. They actually got there, the report says, by better managing crises and setbacks. And so this introduces the idea of resilience into the work that we're doing. And I think it's a special feature of the SDGs that doesn't get enough hype, in a sense, because it's quite different from what the MDGs were doing. UNDP did a report a few years ago talking about the MDG logic, which was all about poverty reduction and growth, without a really strong emphasis on better managing risks. And if COVID teaches us anything, if climate change and extreme weather teaches us anything, it's that we have to manage complex risks a lot better in a very interdependent world. And when you look at the evidence around this, the driver of resilience in states and systems and societies is this concept of social capital. And it's sometimes used interchangeably with the idea of social cohesion, which I think is very intuitive for many, but it's slightly more technical. It has three components to it. The one is this notion of bonding, strengthening bonding within communities. And that's for greater resource and asset sharing, self-help, psychosocial support, coming together in an emergency. So this feature is very important. The other feature of social capital is called bridging. So it's being able to connect communities that are either in conflict, which then requires sort of reconciliation and peace building types of measures, or simply disconnected economically and socially. And therefore it precludes ideas of global supply chains and greater economic activity. These things are essential for recovery efforts and for growth efforts as well. So bridging becomes this other concept. The last one is known as linking. And this is where you link communities, both that are being bonded and bridged, to formal institutions, governments for services, for safety nets and cash transfers, but also to the private sector for insurance schemes, for credit loans, etc. And also to, say, NGOs or multilaterals that are providing assistance. So the research shows us that where you can do bonding, bridging, and linking together, then you get a real boost in resilience. Now, conversely, where you don't do these three things together, then you have problems. Because if you start doing bonding without too much bridging, you can actually strengthen divided communities, or simply just become unresilient in times of crisis because you don't have mobility or access to the wider market, for example. If you do too much linking and bridging, which we sometimes see in certain places, without that kind of inclusive bridging effort, you can strengthen in patronage and clientelistic networks as well. So it becomes really important to pursue this together. And this is where you then get into ideas of scaling. I think this is where you get into some really interesting ideas about the kinds of linking you do that Greta was mentioning. Some is formal kind of cash transfers from government safety nets, but then you have these really innovative models now about, say, M-Pesa, which is allowing the private sector with a kind of a ring fencing of certain regulations around it to do things like cash transfers in a way that's really much more dynamic and fast. Greta, I think that M-Pesa does more transactions in a year within the country than Western Union does globally in the same amount of time, which is just phenomenal. So linking, bridging, and bonding are meant to be really dynamic organizing principles for crowding in lots of different kinds of partnerships and resources and thinking. It's not a static concept, but it's really fundamental, we see, to building resilience, which is key to development now.
Super. Thank you for that, Jonathan. And Greta, I'm wondering if you want to build on that or ping pong off that just a little bit and talk about, you mentioned this earlier, the sector that you're in finance is so heavily regulated. What are some of the things you've also seen in terms of the private sector and government working together for some real breakthroughs?
Yeah, and we're very much in the linking space, and I'm going to give you some examples that are a little bit geeky, so just bear with me. But I think there is a lot. Digital has introduced a huge amount of dynamism into the financial services space, as it has with everything else. But a lot of this is bringing us to a place where collaborative partnerships are really, really important. So let me give you one example, and it's kind of a dry topic, but it's really important to making the digital economy work, right? And that speaks to the point Jonathan's making about linking. You need to link people into a much broader sort of world in terms of the work that I do. So payments are essentially the lifeblood of the digital economy. You can't engage in e-commerce, social commerce, gig work. None of that is possible if you can't make and receive payment for the goods and services that are sold online. And so you need sort of these digital ecosystems to have payments and interoperable payment systems running through them. So if you think about, in our world, payments interoperability is what makes it possible for you to take your credit card anywhere in the world and use it at any point of sale. It integrates different payment systems, so the interface for you as the user is as frictionless and low cost as possible. But that interoperability can be really, really difficult to achieve because it requires organizations that are normally fierce competitors to collaborate, right? So the card companies were early pioneers in this space, literally back in the 50s and 60s. And what they did was that they created shared payment systems that enabled money to flow between banks. So MasterCard and Visa were actually nonprofit associations run by consortia of banks until about 10, 15 years ago. And for many years, those payments were confined to the banking sector, but digital sort of changed all of that. And so it's opened up the payment space to a whole new world of providers, not just banks, but you've got mobile network operators, you've got big techs like Amazon and PayPal and Alibaba, right? And you have to be able to plug into sort of a larger payment system to be able to do this. Now, there's been a lot of experimentation with bringing new players into this, and I was involved in some of it early on. And one of the early successes was in Tanzania, where the IFC worked with the mobile money providers there, who were running their own closed little payment systems that didn't connect to anything else. And they created the rules, the business model, and the government functions that enabled all of those big elephants to sort of send payments across each other's systems. And that required really competitive private providers. I don't know if any of you have ever worked with mobile network operators, you'll know exactly how competitive they are. It required them to come together and agree to collaborate and create the rules and the commercial agreements by which they do that. And it required an outside player to come in and sort of facilitate that. That's probably as much the exception as the rule, having that sort of evolve organically. And there are lots of examples of failure in that collaboration because one partner isn't able to see value in the shared space, or they can't take a longer term view to see where the value lies in that collaboration. And there have also been instances of failure where commercial players do come together and try to build that kind of system, and then they forget to talk to the regulator and the regulator shuts it down, right? So balancing those interests in those broad ecosystems is really important to making it work. So let me give you one example of an amazing success story, which is India. And I'm here to represent the infrastructure SDGs. So I wanted to sort of use this as a way of talking about the importance of public good infrastructure. So India, some of you may or may not have heard of the India Stack, but the Indian government has driven a process over about 15 years to build digital infrastructure that would really change the way people engage with the financial system and make it much more inclusive. A number of pieces came together to make that a reality. The most important elements of it are the Aadhaar ID, which is a biometric ID that the Indian government introduced in 2009. PMJDY accounts, which basically mandated transaction accounts for every Indian household starting in 2014. And then the Unified Payment Interface, which is a payment system, interoperable, which was introduced in 2016. These things came together as a result of first government mandates and regulatory changes in the case of PMJDY, but then public-private corporations like the National Payments Corporation of India, which was created in 2007, which created the Unified Payments Interface. But there was also technology cooperation between NPCI and an organization called Iceberg, which is kind of this open source volunteer developer community in Bangalore. And they helped to define and to develop the Unified Payments Interface. They've gone on to do ID systems as well that the World Bank are using in other parts of the world. That all sounds really geeky and technocratic until you sort of bring them together, and then they can really do magic together, right? So if you take those three pieces of infrastructure, an ID, a bank account, and a payment system, India basically in between 2011 and 2017 went from only 35% of its population having access to the formal financial system to 80% of their population having access to the formal financial system, which if you think about the numbers involved is a huge accomplishment. And if you look at the transactions that have run over UPI, which was really only created a few years ago, they've grown exponentially. So I was looking this up earlier today and doing the math with all the crore and lakh. And by October of this year, they'd reached about 67 million transactions per day on an average day, valued at 1.7 billion US dollars on an average day. So it's just gone through the roof. And we're not even beginning this story and reaching sort of low income people to the extent that we want to be. So what I'm saying is that this whole digital ecosystem is enabled by those little bits of technology that are collaboratively put together by public and private actors and run together by public and private actors. And now what you see is that it's really built for competition because the government sponsored it and the private sector sort of owns and buys into it. You see Amazon coming in, Google coming in, Facebook, Ant Financial, they all want to deliver payment services over UPI. And the great thing about that is that they then have to compete on the basis of the service that they offer rather than owning the whole ecosystem. And so India sort of built this in a way that crowds in a lot of innovation and creativity and creates sort of an even playing field for all of them. That's the very infrastructure that was used in the early part of this crisis to seamlessly deliver to 200 million poor women those $7 payments in 3 waves. So it's really powerful infrastructure. And we're seeing this play out in a lot of different markets. For those of you who want geeky background on it, we have a paper coming out shortly on this.
Thank you, Greta, for that. Abe, Jonathan, anything you want to build off of that?
Thanks, Marty. There are two things that came up while Greta was talking about that amazing set of examples. The one is that it was very difficult in the beginning, right? As Greta said, these really competitive actors, and it's really important to think about political economies, political settlements that underlie these various states, because if you can't align political, economic, social interests together, it's very hard to get things working. And so there was, I think, some innovation in the sense that how did you get elites to kind of come together in that space? The same story could be told about Bangladesh and how it was able to get enough elites together to form this textiles market that now does more business in a year than all the raw commodity exports of Africa, right? So I think the political economy story is very important for the broader talk about partnerships. The other piece that was really interesting is around the fact that the gains that were made, the hard-won gains that were made in the beginning between these financial actors, was really a story about how they repurposed early innovations to serve broader purposes. So interesting to know the fact about MasterCard being kind of an association that then got formalized and then it spun off into its own entity. When we look at adaptive management, you know, the story of adaptive management is really the story is how you repurpose existing things to do greater things and leverage those. And I think that's a great story that Greta tells about how not only did this financial, you know, digital transactions service the market, but it also then led to, you know, electoral types of applications and crowding in more and more actors. That also in some ways spins you back to the political economy question as well, though, in terms of privacy concerns, the need for regulation, and how much can you regulate when you have these elite interests. And so all this to say, it's really important now for us to really understand complex political economies, especially as you get to more fragile places, and what you can do there with technical innovation, and where there might be hiccups that you then need new incentive structures around. And that's why there's been this big call now for more development finance institutions to play better together, because alone, they're not going to reach that kind of game-changing set of incentives that you need in some of these places to be able to do the things we need to do around digital and safety nets, for example.
Great. Abe, any reactions to that, and anything you want to say about how you've managed some of the cultural dynamics within Amazon to really do the great work you're doing?
I think for us is we have amazing and incredible employees, so it's easy to rally the troops once we communicate and say, well, here's how we can help. Here's where we're best at. We're going to use the scale of Amazon scale to put it into place. So for us, really, it's a way to communicating to our employees and helping us work with the partners. So I think building a culture also internally is for us as my team, right? We're sort of setting the example, but we're a very large corporation. So how we can help other parts of the company is to sort of say, well, let's use our influence, right? Here's a way that we've participated and helped our communities in the past. When you're building products, think about the communities too. And that's something that we're trying to do. We're trying to when we're creating products for our customers, also have this lens of our communities, right? And understand, like, how can this product help our communities? Even if it wasn't one of the use cases that you were thinking of in the past, is there something that can be done to tweak it? Is there some additional feature we can add to create a force multiplier, right? Value to the communities that we're working with. That is incredibly massive, because when you think about, like Greta was saying, in India, a small percentage change, when you apply that large volume of population, it becomes a giant impact. So if we have multiple teams across the company starting to think about that way, you know, in the future, we're going to end up with multiple new projects, multiple new innovation assets that we haven't even thought about now. We don't know what the next pandemic is going to look like. We don't know what the next disaster is going to look like, right? So that's one of the things that we're trying to do is really, you know, my team, specifically Amazon, the community in disaster relief, we've done a lot of stuff in the past, and we're using that effort and momentum to move forward that influence across the company. I think a lot of other corporate donors have the capability of doing that, and our partners are really helping us, like, feed some of those requirements and provide that understanding, like, here's what, not just what we need now, but here's what we think we're going to be 5 years into the future. And it will be great if we can have a partner. It would be great if we can have solutions that can fit fill that gap, you know, into the future.
Super. We've got a question that showed up in Whova, and I want to ask this question, and I want to play off of what we've just talked about and really get back to Jonathan's point of fragile, deeply marginalized, peripheral, last mile. How do we, as organizations, shed our power and really, you know, give agency? And this question goes to the heart of this. Living in a digital world, we need to introduce basic digital skills for underprivileged adolescent girls, ensuring gender equality across the world. How to accomplish this without a solid partnership and collaboration between businesses and nonprofits working in the relevant sector. Any thoughts at all on this, and really how do we take this issue of equity and learn a lesson as a society that we really need to change?
Maybe I could come in on this first and then others can sort of build off of it. I think as the world rapidly digitizes and the economy sort of moves online more and more, I think this risk of a digital divide becomes more and more acute, right? We sort of talk as though everybody's got access to a smartphone and a data plan. Well, they don't. A huge part of the world's population has no access to a smartphone, and a lot of the people who are using things like M-Pesa are using feature phones and typing in all those long strings of characters. And so there is a real effort that I think needs to be made, not only to bring people on board with actual proper digital platforms so that they can really interact, because there are a lot of benefits that come from that, but also helping people understand how to use it. And I think technology will help answer some of those things. So very cheap voice activated devices can help with things like literacy, but getting people comfortable with using those services is going to be really important. And I think there's a role for the nonprofit sector there. But more importantly, I think there are some serious considerations that are coming out of digitization, both in the financial space and the non-financial space, about consumer protection, data protection, and privacy. And they are huge and growing issues. And those require partnership again. The way we think about consumer protection in particular at CGAP is this isn't just sitting with consumers. It's a responsibility of providers, and it's a responsibility of regulators too, to make sure that decent market conduct is observed in financial services delivery, that people are armed with information so that they're not making bad choices. Financial health is very much a concept that has emerged in the last few years in our community, and that there's somebody minding the shop, and providers are on the hook to deliver responsible products. And what we're seeing is, in this whole excitement around fintech and innovation, there's a lot of money flooding into this, but they want a return. And the fastest way to get a return, oftentimes, especially when you're working in the credit space, is not something that we would all recognize as a financially responsible product. So I think there's a lot of work to get people comfortable with digital as an entry point, to even get them online, but then to help them navigate the digital world, both in terms of their data, but in terms of their finances. This is a huge sort of coming tidal wave that I think we are going to need to be very cognizant of and build partnerships around.
Good, thank you.
Dave,
go ahead.
One thing I can add is we're, as part of Amazon, the community, there's also another team of ours, which is Amazon Feature Engineer. We understand there's a lot of communities that are underrepresented and underserved, and we're trying to just create programs to help with just understanding computer science, just starting really from K to 12 all the way to our flagship internship program, is how we can train professors and teachers so then they can train their students, right? So it's understanding where those needs are, and if we don't train the trainers, then that sort of like pushing forward it's going to be really hard. So for us, we have a team within my organization that is really working on this gap, with that lens of gender equality, with that lens of racial equity. So really, if we need to, like I said, we need to train the trainers so they can help us have a lot more interest in our students, and also coming up with, I would say, creative and fun ways for that younger crowd to start getting into understanding like logic and how kind of programming works, without saying, hey, you're actually coding, right? Because there's sometimes a little bit of fear in that. I think those are things that we're trying to move forward and push forward, working with organizations like code.org and such around the globe to help specifically that younger population with digital skills.
We've been working with the World Bank on an initiative that we've been doing ourselves for about 15 years. and what the World Bank is increasingly calling collaborative social accountability. And the idea around this, and our program in particular is called Citizens Voice in Action, CVA. The idea around this is that communities take a sort of an audit around what they're supposed to be getting by government, by, in terms of services or what have you, with support, and then what they're not getting. And from there, we facilitate a conversation with government and communities to figure out constructively, how do we meet that gap? And I would see that as potentially part of the solution to the question, because I think part of that question, or a big part of that question, is what is the entry point for trying to have the conversation to begin with? And because we're talking about a development challenge, there could be space for these kinds of initiatives to bring together private third-party providers of, say, digital and fintech, and government and these communities with external facilitation, like we do or the World Bank or others do, and really try to co-create solutions that, as I think Marty said, helps to empower communities and to shed some of the kind of the power trappings that sometimes block out communities. Yeah. In the process, we found that we ourselves become subject to scrutiny by communities as part of these audits. So what is it about our services that aren't meeting your expectations as much as what government is doing? So it becomes this ecosystem for creating mutual accountability, mutual understanding. And so I think the way to go is to try to scale up more and more of these through more and more partners in different places, so that we can actually have entry points for these discussions about underprivileged adolescent girls, getting more access to these kinds of technologies, but as part of a much bigger development program, so that you get sustainable and scalable support over time.
That's great. And I'd like to go around and each of you take a minute or two as we begin to wrap up here and build off of that. Like, what's the formula, or what are some of those key elements or ingredients that you think are essential if partnerships are going to scale? If you could just put your finger down on one or two things that you think are the most critical elements that need to be in place. And we can go ahead and start with you, Greta, if you'd like.
Yeah, I'd like to maybe build on something that Jonathan said earlier, because I think he brought out a couple of really important points. So if I take what I talked about in terms of sort of bringing commercial players in and building these kind of digital ecosystems, that's sort of working on a flywheel of its own in a lot of places now. There's a commercial logic to people coming in, and it's tougher in some places than in others, but that's moving, right? I think the challenge, to Jonathan's point, is going for the places that are hard. Like, I think there's been a lot of kind of picking off the low-hanging fruit, certainly in the financial inclusion space. Okay, you get India, you get a couple of countries, big countries, and you've reached those targets. We've now got to go for the hard ones, the conflict affected ones, the ones that don't want to embrace the regulatory changes that are needed. So I think there's going to have to be a push to sort of move digital into those places. And then for the conversation we had, sort of onboard people in those spaces as well. But I think the other thing that we're going to have to really think about is your point about resilience, Jonathan, because there is a commercial logic for products and payments and credit, without a doubt. However, the place where we see the most development impact in financial services is clearly with savings and with insurance, and to some extent payments as well. And those products are really hard to make work commercially. And so, as we think about giving people access to income through social payments, or we think about savings products, longer term savings products, even dare I say pensions, we have to think really hard about how you build public-private models that are going to make those stack up, because the commercials aren't there yet, and we can't wait for the private sector to do it. So I think as we think about where we want to take this digital work next, we need to think about the populations that are excluded and think about how to bring them on board safely. And then we need to think about the kinds of tools, at least from a financial services point of view, that will give them that resilience, that floor, so that then they can look for the opportunities that may be coming in other ways, right? And so I think that's where the public-private kind of work might be required to make those things actually work, to crowd in public money, to sort of build the foundation for some of it, and then the commercial players can come in on top of it. So I very much believe in sort of the power of public-private partnerships, but I think there's a whole renewed push that's going to happen to bring those inclusive sort of financial systems fully to everybody in the world.
Super. Abe, do you want to take a shot at that?
Yeah, sure. I think you've made great comments. Everything what Greta said and Jonathan. I think for us, it's really going. It's going deeper to the next level, as we're saying, going into the hard to reach places, right? And a lot of times for us, that means we got to start somewhere, iterate, learn, and then apply that. So for us, it really helps kind of bet an idea and then be able to work with. So let's say a large national NGO, test it out, and then be able to say, okay, now we're going to expand this to like all the food banks in the country, right? So it's sort of like that two-step, and I know we all want things to happen faster, and at the same time, I think keeping the momentum is important. So for us to create more partnerships, it's really working with all of those partners that we currently have, listening to them, understanding what they need, and thinking about, okay, well, here's what you're needing in this situation, in this location. What would similar partners in other places need? How can we get this there? Right. So it's really it's a skill exercise. Is what I would say.
Thank you. And you brought up this point of pace and this need for a sense of urgency that, you know, I think there is just a whole renewed awakening to with the pandemics that we're facing now. Jonathan, your thoughts on these key elements? Oh, go ahead, Abe.
If I can have one more thing, you bring a really good point. There are a lot of smaller organizations that are way more nimble, way more flexible, and way faster. We listen to all of them, all sizes, large and small, right? So I think for people who are on the other side of like the NGO and nonprofit side, like even if you're small, if you have a very clear mission of what you're doing, who is the audience that you're working with, and what are the needs that you have, that's really the best start, because partners will find you. Make yourself known, but partners will find you, right? That flexibility of being small is actually really useful, because we can use small partners to test other ideas, to go to places where some of the other ones can't go. Somebody was asking me recently, like, well, how do you feel about working with this organization or that organization? Well, some of them are like a giant freight ship, right? Like they're so powerful and they can do so much good, but it does take a while for us to change direction, and that's okay. And at the same time, there's some really small ones that are like little tugboats that they might be tiny, but they're also really fast and furious. So for us, we really like to work with all kinds of shapes and sizes. Sorry, Jonathan, I think you were going to say something next.
Go ahead, Jonathan.
I mean, I would say two things. One, I would wholeheartely endorse what Greta said about, I mean, we need a vision right now for the last decade of action that is taking us to the more fragile places. And that a staggering 80% of the world's extreme poor are estimated to live in fragile contexts by 2030, the endpoint of the SDGs. And that was a pre-COVID estimate. We know now the numbers will be much, much higher. And so we really need to focus on this as a global community. The idea of no one left behind is still typically thought of as no one left behind in your country, which allows a lot of latitude for everyone to focus on their own pockets of no one left behind. But we need a geographic focus now on the world's hardest places if we're really going to do well and meet the pledge to leave no one behind. The second thing I would say is that we've talked a lot about being adaptive here. What's needed and kind of shifting to demand cultures, etc. But the way in which global development aid works is really still not adaptive enough. Usually there's the coming off of there's an examination of a problem, then you come up with a preconceived solution, and then you plot out in sort of a log frame, kind of a linear fashion, the things you're going to do in sequence over 2 or 3 years with fixed metrics, fixed partnerships, and fixed resources. And no opportunity to adapt to either learning as you go in terms of the complexity in the environment and what will really work, or very little adaptivity to shocks and stress that might disrupt what you're doing and cause you to change course. And so we're now beginning to see more organizations adopting this sort of adaptive management mindset. FCDO in the UK, the agency, has done a lot of work in this space. USAID is doing a lot more work. There's new legislation in the US called the Global Fragility Act, which mandates US government to do more adaptive work, but we need to accelerate the pace on that, because not only do we need to do populations adapt and governments and others try to adapt in these places, but if we can't bring our own partnerships to the table that are also adaptive and can learn in the moment to be able to support these partnerships, if we come in with very fixed solutions that can't change in 2 or 3 years, then we're going to have a huge mismatch, and we're not going to accelerate or scale what we really want to.
Super. And we're getting near the end. I just want to point out, and Jonathan, you might recognize this, coming from David Owens, there was this Spark a Child's Digital Future effort in East Africa. He's suggesting maybe we can do a postmortem and learn from that particular program to see if there might be some value in how we get technology move forward. And then from the same person who talked to us earlier about the underprivileged adolescent girls, making this point of a really strong effort in Delhi and Haryana since 2017, still struggling to try to get the right partnership with the right company on their digital literacy initiative. They just haven't seen much breakthrough. I'm going to make sure that this comment gets through to each of you as panelists directly. So you may have some thoughts you can provide, or we can make sure Mary connects us in the Whova app on that. I'm going to try to bring us towards a close. Mary's given us the hook here that we're just about out of time. First of all, I want to thank our panelists for all of your diligent work and for taking the time to prepare for today and your great comments. I hope it's been helpful to our participants and audience, and certainly sparked a lot of thoughts in my mind. I was somewhat reminded as I was listening to the conversation in the network science world, we talk about network weaving, right? And how do we really do the bridging and connecting work? And I was also reminded of 4 key principles that tend to emerge a lot in studying networks that are truly effective in the network leadership mindset. And the first is to focus on mission, not organization. Next is humility, not brand. Third being trust, not control. And the fourth being willing to focus on constellations rather than stars, or being a node rather than a hub. I just constantly am reminded of how important it is for us to approach this work in the sense of urgency with that sort of principled mindset. And I'm also reminded of a quote from the biologist E.O. Wilson, where he said, the real problem with humanity is that we have medieval institutions, Paleolithic emotions, and godlike technology. And so if you listen to what we were talking about today, you know, really the evolution of what you have shared of where we're going and what we need to do in this time of sense of urgency, if we're really going to live up to this aspiration of focusing on equity and transformation and unleashing the potential of everyone in society, we're going to have to continually remind ourselves, to prod ourselves to do things differently. So I couldn't be more pleased with the work of you, the panelists today, of the opportunity that Global Washington has afforded all of us. And I really appreciate the participants and what you've been able to continue to do in your work, and will continue to do as we look to you to help lead us through and beyond this period of time into integrating the SDGs fully into our efforts. So with that, I think, Mary, I'm going to hand it back to you to make sure we are on time for the next thing.
Yes, thank you, Marty. Can you repeat that last point you made, starting with mission, not organization?
Absolutely. So 4 key principles. And actually, I can just say this. If you go to newnetworkleader.org, you will find a lot of different presentations and videos related to that. But mission, not organization. Humility, not brand. Trust, not control. And constellations, not stars.
Fantastic. I love that. Well, thank you so much to all of our speakers for sharing your expertise with us today. And coming up next is just a quick short break. And then at 10 minutes after the hour, there's a panel on the next gen leadership for global development. All you need to do is click on agenda in Whova and select the next session to be connected. So thank you once again and appreciate all of your expertise. Bye, everyone.
Thank you. Have a
Thank
good
you.
day.
Bye, everyone.